Welcome to Introduction to QuickBooks, presented by Sharper Training Solutions. You can visit our website by going to stsico.com, and you can email us with any questions you have at info@stsico.com. If you're looking for today's material, you can visit us at stsico.com/books. In the last class, we spoke about the customer management module and how we can introduce customers and enter them and fill out all of the necessary information to get a more complete profile of our customers, such as taxes, payments, and other purchasing limits that we can assign, as well as the different customer transactions that can occur, such as customer invoice and receipt of payment. Before we get started, we want to talk about some accounting principles or accounting configurations that you should know that correlate to QuickBooks. For example, customers are going to be your accounts receivable. Your vendors are going to be assigned or associated to your accounts payable. And your employees module will correlate to payroll. One of the larger concepts of QuickBooks and accounting is the different charting of accounts and how we can bring them up in relation to the kinds of reports we want to get. Today we'll be talking about income and expenses and how those correlate to the report profit and loss, or our income statement. This is important because it analyzes profits or loss over a specific time range, whether that's monthly, quarterly, or yearly. In another video, we'll discuss the assets, liabilities, and equity, and how our balance sheet gives us information related to those charts of accounts, and how the balance sheet is meant to analyze the net worth of a business, is meant to determine the overall wealth and health of a business. Today we're going to talk about the vendor module and how we could enter bills and then pay those bills with the funds that we've received from the invoices or payments and sales of all of our customers. We'll also see how we could enter a purchase order, receive inventory, and then enter the bills against that inventory and potentially pay off those bills or forward off those bills to our customers and then get paid against any inventory items that we have, essentially of our cost of goods sold. Okay, let's enter the vendor module. Now, the vendor module looks very similar to the customer module. And what you want to think about here is its particular use. While customer is money coming into the business, the vendor module would be money leaving the business. So let's enter, for example, a very popular bill for your business expense, and that would be, for example, your telephone. Here in my example, I'm using AT&T. Now, there's some information, of course, that will be vague. Sometimes you may not have. Your bill usually does come with some of this information, like a telephone number to reach the company and maybe even an address to mail a check. If we go to the payment settings, it's optional, of course, but it's recommended that you fill this out. The more information that you supply your QuickBooks, the easier it will be for you later to kind of issue reports or even do some of the entries. And so set up the account that's been issued by your vendor. The last part that's important here is the account settings. This will save you a lot of time in the future, and so here we want to tie it to a particular expense account. So when you issue your profit and loss standard report, all the funds as you enter those bills and pay them will go into the right expense account. And so here, this one that matches our AT&T bill will be matched to telephone expense. And the last one here is again optional. It's just allows you to track the different kinds of expenses and what they're used for. So for example, this is more of a service provider thing, and you can even do custom fields like we did with the customer. There's no custom fields necessary here. Okay, and so last thing to do here is to enter a bill. And so we'll go to new transactions, and then we'll enter a bill for this company, and everything will populate as long as you have all the information filled out. You can see that there's no address here, and so Of course, you would have to fill that out if need be to keep more accurate records. The reference number is usually printed on the bill that they send you, essentially their invoice. If not, you can also use the date in which that bill was referencing. I would also recommend setting up or writing in the memo line the date range in which that bill is referring to. It helps a lot. So let's look at the bottom here. So this last part, because you filled out earlier what expense that is, you can see that it's already auto-populated, and that's good. Now, if this particular bill is not yours and you ended up getting billed because you are a contractor for a customer, and then you need to pass on those expenses, there's an item there that you can see that says billable, in which case you can then assign the customer that this will be billable towards, and then you can create an invoice for that customer to bill them against this particular item. So again, useful when you maybe are doing projects and you are incurring all the expenses and then getting paid later for those expense accounts. Oftentimes though, what I'm showing you here is bills that your company has and stays with and you pay with all the time. Okay. Last thing is to pay the bill. So we can enter into Manage Transactions and click on Pay Bills. If you saw earlier, there was also an option to pay it while you were in the entering bill phase. But here you'll check off the bill you want to pay. You'll notice that there's a reference number. If there's any credits or discounts, you can add them here. Sometimes there will be some promotional items or some credits based on some ways that you are maybe paying your bill. In any case, you'll choose the date and then finally decide what funds you're going to be using to pay that against. Lastly, we'll set up, you'll see here, ACH. This means automatic clearinghouse, so it's more for like electronic payments. Another one would be ETF, electronic transfer funds. Okay, and so that's it. That should end up paying our bill, entering our bill, and then paying our bill. Now, if we combine all the transactions that we've done, from customer sales to expenses that we've incurred as a business, you'll notice here now in our profit and loss standard report, we have essentially now a net income of $570. Now, of course, that's just for this month. So if you want to see your entire year's net income, essentially your profit, you can change it to this fiscal year. That would give you a date range. You can also change it by date on the next tabs over, next fields. But here you can see that sales we've made of close to $900, and then we have our expenses that we've made, including our telephone expenses. So by doing your day-to-day operations, right, creating an invoice, receiving the payments, issuing the deposits, then entering a bill, paying the bill, you should be able to easily get a profit and loss report without much of an issue. So let's review some of our essential tasks in the customer center, and then we'll also review some in our vendor center. Now, the customer center would be the area where essentially all of the money comes in, right? All the sales and that you're generating through invoicing and so on and so forth. While the vendor center is more for money leaving your business. This includes expenses that you have, maybe people that you pay, entities that you're liable for, like the governing body for sales tax, or maybe a 1099. So the customer center module is a way to manage all of your customers and display a list of all of those customers, as well as any sub-accounts that may be associated to them. I gave an example earlier about a landscaping company and their potential different homes that you could be doing landscape for. And so that is a way to kind of break up different budgeting accounts and different balances for that. Now, each customer will also have associated invoices, estimates, right? Say statement charges, sales receipts, recorded payments, credit memos, and refunds. So, adding a new customer, you'll click on the button at the top, New Customer or Job, and fill out all the related information related to that customer. Again, the more detailed you are, the better it will be for you to be able to track that customer. As we saw earlier, the vendor module looks very similar to the customer module, but the vendor module, of course, is for bills and essentially money that will be leaving your business. This includes things like expenses that your business incurs, or subcontractors that you need to pay, or even liabilities from other vendors, such as your sales tax. There are various transactions, vendor transactions. Today we used the bill and then bill payments, but you can also issue purchase orders, issue item receipts, and then as well as record inventory and then bill against that inventory. So to add a new vendor, you'll click Add New Vendor, type in the vendor's name, fill out as much detail as possible for that vendor. The more you fill out, the easier it will be. But the most important part out of all of this is to assign the proper account settings so that you can map it to the right expense account. Now, in terms of how you enter the bill, we showed you, of course, to use the workflow, and certainly do that because it automates makes it easier for you to fill out the information and then QuickBooks properly enter it into the right charts of accounts. But you can also enter expenses simply by writing checks directly from your bank statements or your bank section of your QuickBooks. You can see from this Verizon utility bill, it was, as soon as we chose the vendor Verizon, all the information populated, we put in the amount, and the proper expense account was assigned. So you can see here from pay bills, if you do go this route, you'd have to choose what banking account you're going to use or withdraw funds from in order to pay these bills. But if you did write checks, that would be essentially a direct method of choosing those funds. So although writing checks looks to be more direct, we like the enter bill, pay bill option because it lets you keep track of that bill, particularly if you are only paying partial payments or making smaller payments throughout the life of the bill. So it lets you see whether that bill has been closed out or not. Finally, when everything is entered in from your sales all the way through your expenses, the last thing is to kind of get a report, and all your reports can be found in the report menu and then choosing Report Center. Report Center actually is just a quick overview of all the different kinds of classes of report, but you can also go to any one of them directly. Now, because these reports are standard in terms of font and the way they're created, you may need to customize it, and then one of the features that you can that's very useful in QuickBooks is to memorize a report, particularly after you've made changes. And so you can save those customized changes into a memorized report and then pull them up again so that they're consistent. Okay, so that ends our session for Introduction to QuickBooks Part 3, where we reviewed the Vendor Center and the different aspects of entering a vendor and being able to enter a bill and pay that bill. So please don't forget to check out our website at stsico.com or email us at info@stsico.com.